Greetings, traders out there in Traderland. My name's Dez here at Grok Trade, and it is January 31st, 2011, last day of January. And we have a nice update. Check this out. We have the Dow up 0.6%, 0.8% on the S&P, a half a percent on the Nasdaq, and the Russell's 0.75% in the green. Those are big, big numbers. The banks lagged at only up 0.37%. VIX dropped, but not by nearly as much as what you might have thought. And we have gold dropping 0.3%, and the dollar down almost 0.6%, which definitely helped the markets quite a bit today. Take a look at the S&P daily. We had a monstrous drop on Friday on significant volume. We broke through a lot of resistance. That is a shot over the bow. That is thunder in the distance, and that is not to be ignored. We have the MACD getting ready to drop below the zero line, but it could curl up and head northbound. If so, I would assume that we would be having a nice candlestick growing right here. Now here's what we're dealing with as far as the technicals are concerned. We did close over the 20-day moving average after closing below it on Friday. We are hung up now at the 11 EMA and the 8 EMA. 8 EMA acted as resistance. The 11 EMA acted as where the markets closed. We do have a bullish movement to the upside on regular volume. This is called a bullish harami. However, we did not clear the middle part of the body on the previous day, Fridays. We're below it, which will act as resistance or can act as resistance. So I'm looking at resistance around the 1290 number. If we go higher, I do see resistance back at this trend line and at this area at 1300. The big question is, if we can continue up, is it going to happen with any sort of conviction? Today, for the markets to really have healed themselves, I wanted to gain back more than half, maybe 3/4, if not the full amount of what we dropped on Friday. We only gained back about 1/3 of that. Like I showed you just a little while ago, the volatility index was only down 2.5%. I would have expected, after rising 24% on Friday, to have given back more than that, at least 1/3. So in that case, we're looking at around 8%. We only did giving back on the VIX. We only gave back 2.5%. So it's all relative. So what we're looking at here is a bounce. Is this going to be a dead cat bounce? Maybe. If we don't see a significant rise tomorrow, breaking through some resistance on nice volume, then I'm leaning to the bearish side of things. I could see us rising up here a couple days and then hitting our head and turning over. But I'll tell you, if we start to drop tomorrow, it could be a nasty drop, and it could clear out a lot of this resistance. Here, the people think, oh, it's not as bad as what it looks, and then boom, you have your head handed to you on a silver platter. So you got to be careful. This is why I'm virtually out of the markets. I do have a play on gold. I do have a play on silver right now. But I'm sitting on the sidelines until I get some more confirmation, because usually what will happen in a toppy market is you'll get these big candlesticks, big coming down, big ones going back up, very, very choppy. And I'm expecting to see that going into the future here. So it's really important that we watch this and you watch it closely. Do not let a video get by you. Look over here at the Nasdaq. Nasdaq bullish harami, but in the lower area of this candlestick, remaining below the 20-day moving average. That's no good at all. We almost have a tweezer type formation, but not quite. We do have a hammer. So let's see if the hammer brings us any movement to the upside. We continue sub-zero on the 0 line on the MACD. Let's look here at the Russells. Same thing, bullish Harami. And you usually call these bullish Haramis on a down leg. We don't have a down leg or one that's considered at least a definition of a down leg where you have 2 or more candlesticks going in any one direction. We don't have that, but because of how big that candlestick was on Friday, you could almost consider that it's a leg in its own right. So technically, is this a bullish Harami? The answer is no. We're in consolidation or choppiness right now. But anyway, we are below the 20-day moving average, and that 0 line on the MACD did act as resistance. So that's it. That's what we have. Thank you for being a part. And if you have been participating in the 101 videos, I'm actually looking to, I have some questions for some people who've been through all the 101s. If you've been through all the 101 videos, 4.5 hours worth of them, 30 minutes, or I'm sorry, 30 lessons. If you've been through them all, and if you don't mind me asking you a few questions, send me an email. Go to the Contact Us button at the top of the page, and tell me you've done so, and I'll send you a few questions. If you'd be so kind, I would appreciate that. Take care. Safe trading to you.